Hello, listeners. Welcome to the pre-market update, powered by AI. I'm Joe.
And I'm Sarah. Today is March 6th, 2026. Let's dive into everything moving Indian markets today.
Let's kick things off with a look at the Indian market. Yesterday was quite a turbulent session, with the Nifty 50 closing around 24,650, down approximately 0.44%. While the Sensex shed over 500 points, reflecting a 0.45% drop. The decline was primarily driven by financial stocks amidst rising geopolitical tensions, notably the Iran-Israel conflict, which has been weighing heavily on investor sentiment. Now, the Gift Nifty, which is often a precursor to the Indian market's opening, is indicating a negative start, trading at a discount of nearly 233 points from the previous close. This suggests that the Indian benchmark indices might open on a cautious note today. Looking at sectoral indices, the Nifty Bank was under pressure, while the Nifty IT index surprisingly managed to buck the trend, gaining almost 2% as IT stocks showed resilience in a volatile market environment. The FNO data signals a bearish setup with a put-call ratio, PCR, indicating increased selling pressure. However, open interest buildup suggests some short covering might be on the cards. Notably, FIIs continued their selling spree, pulling out substantial funds, whereas DIIs attempted to cushion the fall with their buying activity. Today's market opening seems poised to be influenced by these mixed signals, with the geopolitical backdrop playing a significant role.
Turning our focus to global markets, overnight movements were quite telling. The U.S. markets closed in the red, with the S&P 500, Nasdaq, and Dow Jones all registering losses. This downturn was largely fueled by the spike in oil prices due to the ongoing conflict in the Middle East, which has raised inflation concerns. For Indian IT and pharma stocks, this could mean a mixed bag. While the depreciating dollar might aid export competitiveness, the broader risk-off sentiment could cap gains. Looking at Europe, indices like the FTSE, DAX, and CAC 40 also faced downward pressure, echoing concerns over rising energy costs. Meanwhile, Asian markets presented a mixed picture. The Nikkei and Hang Seng witnessed some recovery as oil prices slightly retreated. On the commodities front, Brent crude is hovering over $84 per barrel, which poses a direct threat to India's inflation and current account deficit, CAD. Gold and silver prices have edged higher, driven by safe haven demand, which could impact the stocks linked to these commodities. With the US dollar to Indian rupee pair seeing some fluctuations, currency movements today will be crucial, especially for importers and exporters.
Now, diving into Indian corporate news, there are several significant developments to discuss. Orkla India shares saw a massive rally, jumping nearly 10% after Citi initiated coverage with a buy rating, citing growth prospects driven by product mix improvements and international demand. This uptick is certainly a positive signal for investors eyeing the FMCG sector. In the realm of technology, Infosys and TCS, along with HCL Tech, led the Nifty IT rally. Despite the broader market weakness, IT stocks have displayed strength, perhaps due to their defensive nature and ongoing demand for tech services globally. Meanwhile, Glenmark Pharma and Polycab India have been highlighted as stocks to watch by analysts, suggesting potential upside driven by their respective sectoral dynamics. On the regulatory front, the SEBI has issued new circulars aimed at improving transparency in mutual funds, which could enhance investor confidence in these financial instruments. Finally, in the realm of M&A, LIG Next One, a South Korean defense stock, saw a significant surge amid geopolitical tensions, and this could have interesting implications for Indian defense stocks, given the cross-border supply chain linkages.
Shifting gears to international corporate news, several stories are worth noting. In the U.S., stocks like Broadcom rallied on the back of robust AI chip revenue projections, providing some support to an otherwise declining market. This could indirectly benefit Indian IT companies involved in semiconductor manufacturing and services. In Asia, the South Korean market has been particularly volatile, with LIG Next One shares skyrocketing due to the ongoing Middle East conflict. This volatility underscores the interconnected nature of global markets and may influence investor sentiment in Indian defense stocks. Additionally, Pfizer has secured approval for an obesity drug in China, which bolsters its position in the competitive pharma landscape. This development might have a ripple effect on Indian pharma companies with exposure to similar therapeutic areas. Lastly, Chinese markets have shown resilience amid the Iran war turmoil, providing a contrasting backdrop to the broader Asian sell-off. This resilience might offer some insights into market stability and investor behavior, which could indirectly impact Indian market sentiment.
On the macroeconomic front, the RBI's stance remains a focal point. As oil prices surge, there are growing concerns about inflationary pressures, which might influence the central bank's monetary policy decisions. Although the RBI has maintained a cautious approach, any significant deviation in global energy prices could prompt a policy review. The recent U.S. Federal Reserve commentary suggests a more hawkish stance amid rising inflationary threats, which could affect FII flows into India. Higher U.S. interest rates generally make emerging markets like India less attractive for foreign investors, potentially impacting liquidity in the domestic market. On the geopolitical front, the escalating Iran-Israel conflict not only poses a threat to global oil supply chains, but also raises strategic concerns for India, considering its energy imports and the large Indian diaspora in the region. Domestically, the latest GST collections and fiscal updates indicate a steady economic recovery, although the looming inflation threat could overshadow growth prospects. Investors will be keenly watching how these macro factors evolve, as they have direct implications on market sentiment and investment strategies.
To wrap up, let's highlight some key takeaways for Indian investors as we head into today's session. First, with the GIFT Nifty indicating a negative opening, caution is advised. Keep an eye on oil prices and their consequent impact on inflation and related sectors like energy and FMCG. Sectorally, IT stocks have shown resilience and could continue to offer some stability amid broader market volatility. Defensive sectors, including pharma and FMCG, might also attract interest given the current global uncertainties. It's crucial to monitor geopolitical developments closely, as any escalation could further dampen market sentiment. Investors should also watch for any RBI announcements or policy hints that could emerge in response to the inflationary pressures. Finally, keep an eye on support and resistance levels for the Nifty. A breach of significant levels could trigger further technical movements, so staying informed and ready to adapt is essential in these turbulent times.
That wraps today's pre-market update. Hope you found it useful heading into the session.
Drop your thoughts in the comments and follow us for daily updates. This is Sarah
And Joe, signing off. Happy trading.